All right, let's take a look at a couple of markets here ahead of the FOMC meeting tomorrow. I think that may be a market-moving event. So first off, the stock market. It was pretty clear the stock market was moving down into a daily cycle low right here. Also pretty clear that we got an intervention ahead of the FOMC meeting. This is not unusual. It often happens. It's just easier for the Fed to make decisions, especially hard decisions, if the market is moving up into that FOMC meeting. So the question now becomes, and I can't answer this question, whether or not after the FOMC meeting, where the Fed is going to raise another 25 basis points, whether or not that the market is going to come back down and finish that move into the daily cycle low. This did not retrace at least 38%. So this was somewhat artificially aborted a bit prematurely. I don't think anybody in there, there's no big institutions that are buying ahead of the FOMC rate hike. So this isn't a natural rally. This is an intervention, and the market may break this intervention, and we may have to come down, break below this low, and get a more natural daily cycle low. On the other hand, the Fed funds futures are starting to predict that this will be the last rate hike and that they're going to pause on the next meeting in June. And if they start to, or if Powell hints in the press conference that they're probably likely to pause, then everything is going to take off to the upside. So that's the stock market. I don't have a good answer one way or another, whether we're going to come down and finish the daily cycle low, undercut this, or whether we just take off to the upside, and it'll probably just depend on what Powell says at the press conference. All right, keep in mind that the dollar is the mirror image of the euro. So the dollar, if the euro is dropping, the dollar is going to be rallying, and it looks to me like the euro is finally dropping down into this daily cycle low. It's below the 10-day moving average. Obviously, it's broken the uptrend line there. Not oversold yet, so the assumption would be the euro is going to find that daily cycle low probably tomorrow on the FOMC meeting, or maybe a day or two afterwards, and then it will resume the intermediate rally. So that would imply that the dollar is going to rally another day or two or three, and then roll over and break that intermediate degree bottom. Let me go over the dollar here real quick. All right. So I think this was a daily cycle low. It hasn't gotten much traction here, but my guess is that, and you can see that we're already getting overbought on the dollar, so they're probably, the FOMC meeting either tomorrow or the day after, maybe even on Friday, this rally in the dollar will run out of steam, roll over, and then we'll come down and break this pivot convincingly and start the I think we've already started the declining phase of the intermediate cycle, but confirm that, but with a sustained break of this pivot. So that would be my guess. Is the currencies are in little counter trend moves right now. I think at some point after the FOMC meeting, the major trends resume. And just like the Fed usually tries to prop up the stock market ahead of the FOMC meeting, they try to attack gold ahead of the FOMC meetings. And so no surprise, gold has been heavily suppressed. I think I counted yesterday, there was nine days here where gold was blocked from recovering this 10-day moving average. And yesterday was the most blatant, probably the most blatant manipulation of the silver market I've ever seen. But anyway, gold is getting really deep in this daily cycle. So, we may have to, it may have to drop down and break this pivot here. Right now, this is the lowest pivot, and so it may be that we've wasted about whatever this is, 9 days of this second daily cycle, or if we get a rally in the dollar for a day or two, it may be that gold comes down, breaks this pivot, and then we just get this. This turns out not to be the daily cycle low, and the daily cycle low is somewhere either on tomorrow's FOMC meeting or a day or two after that, and then we start the second daily cycle rally. But I think gold is well. Let me go over and show you the banks, because that's where the problem that the Fed has. That's where the real problem is. So this is the regional banking index. You can see it's starting to break down again. And with the banks breaking down, liquidity is going to be flowing into a safer haven. People are going to be pulling the money out of the banks and putting it somewhere else, and that safe haven is gold and silver. So if the stock market comes down and completes that daily cycle low, then we're going to have a severe sell-off in the banking indexes. And that's going to be good for gold. So this is the regional banks. Here is the Philly Banking Index, and I've noted this before too. This rally, even though the stock market's made some good headway since that bottom in whenever it was, November, the banking sector has not. And even this daily cycle, the banking sector just didn't make a whole lot of headway. And even the Philly Banking Index is in jeopardy of breaking this pivot if the S&P breaks that intervention and comes down and makes a deeper daily cycle low. Then the banking index is probably going to break down here as well. This will turn out to be a bear flag, and again, that's going to be really good for gold. It's going to require that the Fed start to print money. They'll, if these banking indexes break down, then this will be the last rate hike. And they're taking a big chance right now with the banks in such a fragile condition to hike again, which is what's causing the stress in the banking system anyway. So I'm watching these banking indexes closely here, and I want to see what happens tomorrow. If they break down violently, should be good for gold, should be good for an end to the rate hiking cycle, and it should start the Fed on more QE, probably stealth QE. They won't announce it publicly, but they're going to have to print in order to cover all of the deposits in these regional banks that are starting to go under. And the saying is, there's never just one cockroach. So I think we've had 3 banks already fail. There's going to be a lot more to come in the future here. And so watch this banking index. If it collapses after the FOMC meeting, then gold and silver should take off. They should complete their daily cycle lows, and watch the currencies. The dollar should probably roll over and start down in earnest, and that's that would push everything to the upside. So either way, even if the stocks have to make a deeper daily cycle low, I think everything, once those cycle lows are in, gold, oil, stocks, I think everything takes off to the upside after that.